Hi friends, welcome back. I want to give you an update what's going on in the markets today. I'll share my thoughts and I want to get yours as well. So first, markets keep hitting all-time highs, and the question's going to be where do we go from here? Before it was all about AI craze, everyone was jumping on Nvidia, and in fact, I guess we were also leveraging the jumping on Nvidia and the AI stuff. Will that continue? Well, it was interesting because there's some big news coming out of Google today. They made a deal for some nuclear power. Essentially, it is to power your AI data centers. If I remember correctly, I think Microsoft made a similar deal. You guys can correct me if I'm wrong. I think it was Microsoft. But Google did that today, and it was with Kairos Power, and it says Google has ordered 6 to 7 small modular nuclear reactors. So I guess they call these things SMRs from Kairos Power, becoming the first tech company to commission new nuclear power plants to provide low carbon electricity for its energy hungry data centers. There wasn't a mention of it in this article, but I think water is going to be a big problem going forward also. So lack of power, or you could say need of more power for the AI stuff. You're going to keep hearing headlines in this. Again, Google just is going to nuclear power. And I mentioned the water stuff because oftentimes you're building these data centers in places that are like basically the desert. So you need water to keep stuff cool. And I think nuclear power needs water also. So I'm just looking at those two things if you guys are talking about, where is there growth out there? Yeah, I'd say power and water stuff. Also, too, what's going on with oil as we're looking at the markets here? So oil went down today, and essentially there was a report in the Washington Post regarding the war with, or we could say potential war or conflict, however you want to call it, with Israel and Iran. So I guess Israel is signaling to the USA that they're not going to hit any nuclear facilities or Iran's oil production. They're just going to go after military targets. So oil then went down in price, right? Because we're not as worried about supply. The other downward pressure on oil as well, which I keep hearing about, is the slowdown in the Chinese economy. So essentially, right, they won't need so much oil. I'll talk more a bit about China, but I want to connect this to sort of an interesting report from the Wall Street Journal, because you guys got to track this stuff if you want to understand, what's going on in markets, understand sort of like how everything fits together. So the market's going to be bumpy the next couple of weeks. We have earnings reports coming up starting this week, and I think we had a few last week, but starting this week we're going to a lot more. And I believe tech earnings are coming also, but this week is going to be like banks, and then we'll also get Netflix. Now, one of the things that is interesting about this is that whenever we talk about these things, you want to talk about, okay, what did each individual company say? Are they making money or not? What are their predictions for the future? And then also we have the election where there could be some changes in policy. So I just think there's a lot of, chance for like a volatility. The election itself, I think, is on November 5th, I believe. And then the Fed is going to meet on November 6th and 7th. So it's going to be right after. It's going to be a crazy week, earnings and then election and then Fed, all, within a couple week period here. So hang on your hat and obviously stay tuned to this channel as we go together. Now, economists were releasing kind of their opinions on what they think the difference between Trump and Harris. And this was a survey done by the Wall Street Journal. I think it was an interesting one. It's pretty similar to the data that we've seen before. And basically what they do, they just go through their policies and kind of give you some expectations. So 68% of them, so it's a majority, think that inflation will go up under Trump. So Trump is basically saying, hey, I'm going to raise tariffs on everything. So that's probably true. If he says something like that, I wouldn't be shocked, right? And then if you're raising tariffs, and then a lot of it's going to be on Chinese goods, but it'll be other foreign goods as well. I agree with that. I think you're going to see inflation. But so again, was it 68% of economists think that you'll see more inflation with Trump. Regards to the federal deficit, federal debt, 65% of the economists think that Trump will have more deficits. Now, to be fair, and I mentioned this before, and this isn't just this Wall Street Journal thing. We've seen it before with a couple other ones that came out. It was like the Penn report that was recently, and there was one, Goldman Sachs report. Yeah, I remember these. And it's the same numbers that we're hearing from the Wall Street Journal. So all these are roughly the same. But basically, deficits are going to be higher under Trump, and then the debt will go more under Trump. However, deficits will still go up, and then the debt will still go up under Harris, just more so under Trump. So both of them are going to be deficit spending. So there's that. So that's obviously a thing. Whether or not, because the argument that Trump would make is, hey, I'm going to cut taxes and we're going to, create deficits, and then we're going to get things going again. So according to, again, this is the poll coming out from the Wall Street Journal, 45% of the economists said the economy will grow faster under Harris. 37% of them said faster under Trump, and then 18% said no difference. So it's kind of a wash there. So tie. So whether or not Trump grows the economy faster or Harris grows the economy faster, I mean, this is according to the economists, it'll be about the same. So I think, and I was looking at these things, I tend to agree. This is just based on their policies. If you're going to be cutting taxes, raising tariffs, yes, probably your deficits will be higher if the growth isn't there. And then chances are inflation will be higher. So it's not that hard to see, but I just wanted to lay it out for you guys because you have to understand like how all this stuff fits. The reason why is I notice it. It's very, very noticeable that dollar's been strengthening. So I live here in Korea, guys. So we track it every day. When you're in the US, you may not notice as much, but when you're abroad, you really, really know. And dollar's been volatile, so it's been getting stronger. And there was a couple ways to think about this. I read one where one you can call analyst or hedge fund, they were saying this is due to bets that Trump's going to win the election and Trump will be, well, it's hard to say better for the dollar. We'll just say there may be a stronger dollar under Trump. So the bet would be that if Trump wins, and that's sort of what one hedge fund was saying, then inflation would be higher. And if inflation were higher, then that would lessen the chance that the Fed would cut rates. And then therefore the dollar would be stronger. So that I know there's a chain of events that would have to go on there for all those things to occur, but that's one reason the dollar is going up because it is going up. So because we're trying to explain why. The other thing too, which I was thinking, and I don't know if anyone mentioned it specifically, but just sort of my thinking is, I keep reading that we have a weak Chinese economy. They just came out with a report today. Their exports are down, so it missed expectations. So they're sending less goods abroad. And the basic gist of it before was that they had the property meltdown, right? And so to make up for that loss of GDP, because the real estate sector is really important to China, they're trying to grow their exports and also grow their tech industry. If exports are down and they want to stimulate everything, when in doubt, print a whole bunch of money and try to get things going again. There's been rumors of the stimulus coming from China for the last week or so. No one knows exactly how much. They were even talking about it over the weekend. So that was actually big news around here. Are they doing it? Or not doing it? And their market's been extremely volatile. I mean, it's be like up 5% one day, down 5% the next day, that kind of stuff. So it's been really volatile. The rumor right now, and no one knows exactly that. China, I think they're going to try to, and they're essentially going to try to raise their debt ceiling. So similar to what the USA does, and maybe they'll be printing like $800 billion that kind of, well, dollar is the conversion, but yuan would be the currency that they use. So we'll see if they end up doing that by raising debt for them, and then using that money to stimulate the economy. And then there's also been an issue as well as a lot of their property, business properties are struggling, or commercial, I should say, are struggling. It was interesting. I didn't know it was this bad. So some of the offices there are 40% vacant. And then in the bigger cities like Beijing or Shanghai, and I've lived in both, many of the offices that they were saying here, citywide vacancies are at 20.6%. And then that was Beijing. And then Shanghai, it's like 21.5%. It's like really crazy. So, 1 out of 5 offices are empty, are vacant. There's a couple things. One, you could say overbuilt. Another one you could say is people working from home. And another thing you could say is like they're just letting people go, and the work just isn't there. So you have a slowdown. And you have to talk about this stuff because, like, for example, when you say, hey, what's growth going to be like under Harris versus Trump? Well, we're all connected, right? Regardless of who is president in USA, you still have to deal with the meltdown in China. Like if the Americans are making a bunch of iPhones, who's going to buy said phones, right? And if, say, people in China aren't buying phones and, everything slows down, then Apple can't sell so many phones and they have too many people on staff. They may have to fire, et cetera. And it could be any number of countries. So, in my opinion, like I was just kind of thinking about the markets, energy, water stuff probably looks good. Too much exposure to China, probably not great. You'd probably want to wait for that kind of stuff to bottom out. But figuring out the bottom of that is kind of tough. Are we there? Some people, you could certainly make the case that, and I'm saying you could make the case that, is exactly now, who knows? But because, things get so bad in China that the government has to do the stimulus, and that'll, signal a bottom, but who knows? Like, I hope you guys understand what I'm saying. Like, I can't predict that kind of stuff. I can just say this is what look for. Some of I think it was Goldman and others were like saying, yeah, you got to invest in China. And I mentioned this stuff before, is just that the risk with that is that, just the transparency, right? You don't have access to their books, and even if you do, you don't know if the numbers are good, etc. But I will say, regardless of what happens with the China situation, it is definitely connected to the USA in terms of economically at the moment. The one thing that was interesting is China's been doing a lot of drills to be more aggressive towards Taiwan. That was a big report that came out today. In terms of earnings reports coming out this week, and again, it's going to be really, really volatile. I guess we're going to hear from Bank of America, Citigroup, Goldman Sachs, Johnson & Johnson, United Airlines, Morgan Stanley, Netflix, and American Express. It'll be interesting when the banks, when they come out, what they have to say. Usually they'll do, you know, the same kind of stuff like, hey, you know, this is how much we have in deposits, and this is how we're doing, how we're, because we're going to want to hear like how our consumer credit card doing. Are you guys, you know, doing a lot of bank deals? Are you going to see some mergers and acquisitions? We're going to see a lot more IPOs, and that'll give you a general sense of like if people are willing to throw money on more, you know, so you could say speculative stuff, experimental stuff, or not. When you look at something like American Express, that'll tell you like what's going on with business travel, those kind of things. And then when you hear from Netflix, it'll be interesting if they're growing user bases or not. My understanding with the Netflix, I think they've introduced an ad tier. I can't remember what the price is, and it varies. I'll just tell you here, guys, Netflix is really, really cheap here in Korea. It's like $5. It's like really cheap. I don't know what it is in USA right now, but you guys can let me know on that. Anyway, that's what's going on in the markets this week. Again, I think it's gonna be crazy volatility in the next couple of weeks. You have earnings from various companies. You got the election, then you got the Fed, all happening now. And if I had to bet, I would say probably the Fed's not going to do a big cut next time around. I don't think they will, but you know, who knows? The Fed surprised me. I didn't think they were going to go for the 50 this last time, so I was definitely wrong on that. I was thinking either hold or smaller cut. And then this next time around, I mean, they essentially have to balance it. You know, are we worried about growth? If we are, we're going to cut. But then are we worried about inflation? If we are, then we're probably not going to cut too much, etc. So, and historically speaking, interest rates aren't that crazy high. It's just that people are gotten used to cheap money. That's essentially what it is. So, and we'll see. So anyway, I do appreciate your time. Want to hear your thoughts on any one of these stories, and I'll catch you all in the next video.